Hello guys, so remember that I told you that I'm going to create a video on a NAS100 risk management strategy for prop firms. So this is the video that's about that. And the thing about this video is that um, you don't um, you don't need to rush on this because it's a 5 minute strategy. So um, you will need to use small lots for this. But first of all, um, I'll not use this for now, the 5 minute scalp, um, because I need to tell you the whole strategy how it works. Um, so the first thing you need to do is that, for example, you're on 5 minute time frame of NAS 100 and you decided to go into a trade based on this here because this here is going to give you the exact time frame confluence um, that'll let you know how to get in, right? So for example, you decided to get in, let's say here. Okay, why here? Because I want to explain the stop loss and pips and stuffs. Okay, so first of all I want to say, like, for example, you got in here, right? And all the way down, if your stop loss were at 100 in here, this is from 16273 to 16173, yeah, so almost like uh, 100 pips. So from this you should be, if you lose this, right, you should be in risk of 1% of your portfolio. Let's say if your portfolio is 100,000 dollars, so you will be risking 1k with uh, these 100 pips. So calculate that first, and then once you got that right, then um, for me, this will be one lot. If I lose one lot in this whole 100 pips, I'll be losing 1% of my portfolio. So do your own calculation first. So uh, this will be our strategy. So first of all, we will enter, for example, if we got this whole green thing in here, right? So we will enter here with one lot, okay? And the price will like go here, go up, and then it will be retracing. Once it retraces, right, we will place a horizontal ray in here on the top of the price where it started to retrace. So basically it's here, right? And once it gets back to up here, closes above on 5 minute time frame, close above the horizontal ray, we will enter another position in here, but this time will be the two times lot size of this that we enter here. So this was one lot, right? And this will be two lots. So overall we have three lots running. So we get it here, but our stop loss will get to here at this time. So not because in previous 30 minutes go strategy, we got we might have entered in here and put our stop loss in here, but because this is 5 minute time frame, we will go to like uh, one or two candles before, because this candle is too small. We'll go two candles before. Normally it will be the one candle before the candle we open trade on. So our stop loss will be in here, open entry will be in here, and then we'll ride all the way up to the next take profit zone, or maybe where a signal shows take profit, we will take profit from there. This will be our prop firm strategy. So let's do with another example. Let's say a proper example where, yeah, here it all starts from the beginning. So we enter here, uh, in my case with one lot. So I got in here with one lot. Price retraced. So I place a horizontal ray in here. because this was the highest area before the price retraced. Once it retraced and there was an obvious close above this price, I wouldn't like to call this an obvious. I would like to call this an obvious because this is way bigger. Or even this would work. Yeah, it closed above it in here, you see. So let's say if this one closed above it, right? Our entry will be in here, but our stop loss will be in here. Okay, so I will be entering a true lot position in here, and my stop loss will be in here. Okay, I'll let the price drive. My take profit will be in here. Okay, but because the price went up and it stopped at here in the white candle, I'll be taking profit in here after that because uh, there's no point continuing on. It won't go higher anyway because the signal changed. So I'm going to take profit in here. And the other thing that you need to be paying attention to is that once price goes above um, your level, right? Like for example, you got it in here, you got another candle that close above your current candle, right? Or maybe something like this, close above your entire candle. You should place your stop loss at your break even right away. Maybe at this scenario it was bad, but most of the scenario it ends up good. Um, you won't lose your positions. So let's see how much time do we have. Okay, still 6 minutes. We have more time. So let's give you another example where the signal might have been starting here, but our actual signal started with here, right? So we got in here with first lot. Okay, this was our first lot. We got in here. Okay, price went. Our stop loss should be in here. So first lot, price went up, started retracing. So we place our horizontal ray in here. Price retrace, didn't hit stop loss yet. Still is one lot, low risk because this is not a lot of risk. Wait a minute. This is only about, yeah, we lose $400 if we hit our stop loss. 400 to $500, not a big deal. Only 0.5%. Once we entered here, right, we will open a new position, okay, and place our stop loss in here and let the price drive. Okay, price went higher and higher. Okay, we had a close above the market structure area, so we put our stop loss somewhere in here maybe first. Okay, we adjust our stop loss as price goes higher. If price went here, right, we'll place stop loss above break even. Let the price drive to the next resistance zone here, or we could just take our profit according to these, okay, or with this one, okay, or here, once this turns blue, okay, or this white candle. So you got this example already. Here we have a good example. We get into here with one lot, okay, price retraced, so we put our horizontal ray in here and close above the horizontal ray, two lot position, stop loss in here, let the price go higher. Price went here, right, above the market structure area, so we place our stop loss in here above break even, let the price drive higher to the next resistance zone, or till it leaves this green area of our signal, and then we take profit. So here obviously our risk was like very low. How much? $20 risk, yeah, versus the gain, 1,000 dollars. Okay, that was 200 and this was 1,000. and plus this 1000 plus 1000 more, which is 2000 because there was two lots. So totally we made $3,000 out of this on the risk of how much risk is this? $400. 2,400 out of $400. Um, that's a lot of good risk reward ratio.